Hey everybody, welcome back, my magnificent monsters, to the show. Grab a can of the good stuff, or, maybe coffee's more of your choice. I feel like coffee's for closers, maybe, but what we're talking about today is for market makers and not market takers. Turns out the biggest, most bureaucratic, slowest moving entity on the planet has decided it wants to be a market maker. That's right, US government. The same people who run the DMVs have decided to stop being the world's lender of last resort and become the house that makes the deals. Welcome to Uncle Sam's Casino, where the chips are all paid for by taxpayer dollars, which is what you and I do. And the house doesn't just have an edge in this game. It can change the rules on a whim. Owns the whole darn thing. For decades, we've been watching China play a masterful game of 4D chess, locking up the world's critical minerals. They spent over $57 billion cornering the market on everything from lithium to rare earths, the pixie dust that powers iPhones and Teslas, and even the guidance system on critical missiles that protect our freedom to argue about whether pineapple on pizza is a good thing or a bad thing. What do you think? You like pineapple on pizza? I mean, I like a good Hawaiian style pizza. Sometimes it's good. Anyway, blasphemous if you're Italian, I guess. Now, while Beijing was buying up the world's mines, Washington was, well, let's be honest. They were probably debating the official bird of some forgotten territory, but now we see the alarm clock finally going off. And their response wasn't just to start playing chess and compete with China. No. They flipped the whole board over. They scattered the pieces. They declared, we're starting a new game. We brought in new tables, new boards. And this is a game where they're the dealer, they're the pit boss, and the whale of a buyer all at the same time. How's that supposed to work? I mean, this isn't this isn't the industrial policy of years gone by. Maybe your parents, your grandparents, maybe you are old enough to remember when everything was a free market. But this is what FTI Consulting is calling American-sized state capitalism. The government isn't just co-signing a loan for promising a miner anymore. They're actually buying in. They're taking equity, guaranteeing prices. They're making offers that the market just can't refuse right here. I mean, it's too good to pass up. So let's look at the new playbook. The three-pronged attack on this industry of mining. First off, you have the classic sugar daddy type of loans. The Department of Energy handing out loans like candy from a white van. Free candy. Yeah. Make sure you get the candy before you get in the van. And they handed Lithium Americas, LAC, a $2.3 billion loan for its Thacker Pass project. That's not just a gentle nudge. That's a rocket-propelled launch into production. At least it should be. For the established players like Albemarle, ALB, and SQM, kind of a nightmare. How do you compete with a company whose biggest investor has a money printer in the basement? I mean, they just, you need another billion? Here you go. Second off, and this is where things get a little more spicy in the story, is the direct equity plays. The government is taking stakes. They're not like ribeyes. They're taking stakes as in pieces of ownership. They're not just a lender, they're a shareholder. They actually took a 10% stake in USA Rare Earth. And take a look at MP Materials, the only major rare earth producer in the US. The government gave them a $150 million loan and took a 15% equity stake. And get this, they actually guaranteed prices with a long-term price floor. So let me repeat that. A guaranteed price floor. The U.S. government has guaranteed that MP Materials will not and cannot lose money on their products. This is kind of like going to the Vegas casinos, and the casino manager walks in, shakes your hand, promises you that if you lose at blackjack, we're going to give you all your money back plus a free steak dinner, the ribeye kind. I mean, it's kind of the ultimate risk-free bet and potential game changer here. Now, third, we have the market-shaping mechanisms happening. This is the government flexing its muscles as the ultimate market maker. They're creating a $2.5 billion strategic resilience reserve and reviving Project Vault, a $12 billion stockpile operation. They're not just buying minerals. They're actually creating artificial demand to build stockpiles with. Nowhere is this more obvious than in the uranium market right now. Washington is moving to ban Russian imports. Well, it didn't just move. I mean, they did it all the way back in 2023. It takes effect January 1st, 2028. It's kind of a huge deal in the uranium market. To fill that gap, they're not just hoping for the best. They're actively buying uranium for the stockpile. And they're doing this at or above market prices, which pushes pushes everything up. And this is all to restart domestic production. This is a direct injection of cash and confidence. Makes a company like Cameco, which is a Canadian producer, one of the most obvious winners here. They're reliable, they're non-Russian, they supply the U.S., and the U.S. needs supplies. And if you want to play the whole sector, URA ETF is one that I'm holding, and it's sitting right there, ready for government money injection, liftoff. So how do we, the magnificent monsters of the markets, how do we use this Uncle Sam's casino framework to make money? I mean, you have to decide if you're betting with the house or against the house. Usually the house always wins. So the house favorites, direct winners, these are companies that get direct handouts, or they're set to get direct handouts, like MP Materials, MP, Mike Papa. It's the clearest example. With a guaranteed price floor, the government equity, I mean, they're basically like a utility for the United States at this point. Then you got Lithium Americas, LAC, that's Lima Alpha Charlie. It's another potential win. With a massive government loan, they're basically injecting them right into the market for competition. These are companies sitting there at the VIP table with the pit boss and arm around them. Don't worry about this. We got you. I mean, the protected class, the indirect winners. This is the uranium sector. The government has created a walled garden for them. Cameco, even though it's a Canadian company, they're kind of the king of the castle here. And their ticker, CCJ, Charlie Charlie Juliet. The policy is tailor-made for Cameco to thrive. And there's not really a second placer at this point in time. I mean, you've got LEU, but they're coming on not as a miner, but as a producer of fuel. Are they going to compete with Cameco, who owns the mines, owns the production, owns the 51% stake in Westinghouse to actually produce the reactors that need the fuel? I mean, CCJ built themselves a fortress, pretty much. Then you have the old guard, the potential losers. And this is where it can get a little tricky. I mean, you've got companies like Marl, ALB, Alpha Lima Bravo. Their chart is coming up off the bottom viciously. And SQM. They're fantastic. They're well-run lithium producers. But they're now competing against a guaranteed winner, Lithium Americas company, LAC, who doesn't have the same kind of cost of capital because they're a guaranteed winner. I mean, The risk here is margin compression and market share loss. They're playing by the old rules in a game that just got completely remade. And the contrarian play, the government is notoriously bad at picking the winners. I mean, the history of this, if you just look back at the history of our country, the United States is notoriously horrible at trying to pick good companies to invest in. They're driven by politics, not by actual good business decisions. The contrarian bet is that one of these government-backed darlings is probably going to faceplant. The bureaucracy, the permitting nightmares, the execution risks, they're all real. If you see a company like LAC or MP starting to fail to deliver despite the government's help, well, that might be a sign that something's amiss. Could be a shorting opportunity down the road, because when a government-backed project fails, well, they don't just fail a little bit. They tend to fail spectacularly. Just ask anybody that's been in the military. So, crack open another can of Monster. Look at the board. The game's changing. The U.S. government is no longer just a passive observer. It's an active, aggressive, incredibly well-funded player. Ignoring this might be to your detriment. Either bet with them or against them. I mean, the incompetence is high, though. So maybe you just get out of the way. Ride while you ride, ride or die. You know, ride while get while the getting's good. Ride while the ride's going. But when the music stops, make sure you got a chair or you got your profit protected. So let's start looking at some charts, see what the overnight action brought. See what else we can get into. And pop it over here. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I'm just a dude on YouTube. I make some predictions. I talk about stories, and, you know, they may or may not come true. So this presentation is intended to be informational, educational, fun, entertaining. Not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. You be careful out there. You might lose money. You want somebody to tell you what to do. There's an Edward Jones office underneath me. They opened up. I think it was yesterday. Maybe it was the day before yesterday. Opened up. Officially open for business. So you can go get financial advice at a financial advisor. But that's not what I do. Calendar's pretty devoid of anything happening this week. And we're staring down the end of the month here. Last trading day of the month, tomorrow. It's not historic, February is not historically like this big end of the month thing, but options players are playing it like, I don't know. It's pretty crazy. When I've watched the options flows, we've seen a lot of shenanigans going on the last couple weeks. Yesterday, bingo bango, I did a little play on Nvidia dropping on earnings and just cash out 50% profit. That's pretty sweet. So look at the cues. We'll circle back around to this, but I pull up the gamma heat map here and try to read the tea leaves of the markets and figure it all out. Where are we going? It looks like we still have some upward pressure here into that end of the month expiration. So we'll come back to this in a minute. Check in on QQQ. Yesterday I predicted we'd hang out in the red zone. Maybe possibly pin in this area. Well, it drifted a little higher, so didn't quite get it. Usually Friday's the day I can predict the pinning the best, because that's usually where the biggest options expiration is. SPY. That's interesting. I guess I cleared the chart. Cool. Gosh, love it. So the range was on there yesterday. I guess we'll have to draw a new range for today. And right there we go. So we'll come back to this after a while. Crocodile. Try to pick some levels. Now, why don't I do it at the beginning of the show? Well, several people have been like, why don't you do this right after the open? Well, here's the deal. These gamma levels right here changed drastically in the first hour trading. They call it amateur hour for a reason. And we can see some pretty drastic changes take shape in these gamma levels. Now look at that big level down there, but that's only 277 million. Not that big, really, for Qs. The $1 billion level would be nice to see, but we haven't really seen $1 billion levels in over a month on Qs. People just quit playing so much. Now, we do have a $1 billion level right down here at 690 on the SPY. Well, we also have this kind of little trail of a bubble going higher with 500 million level up here. So this will be interesting to see what plays out. We also have a 400 million level here. Another 450 million level down here at 680. So it's kind of balanced a little bit into the end of the month, which is just tomorrow. So we'll come back and check on that toward the end of the show. Stay tuned if that's the kind of thing you want, or you can always come back and watch the replay. Replay will be right here on YouTube in perpetuity. Checking out ES. Well, we still got a downtrend cooking. Tried to break through yesterday. Look at that. Look at that. Tried to poke through. Tried to poke through. And then NVIDIA earnings happened and pushed us back below. Now we're coming up for a secondary test. Reject that. Well, you can see what we did before. And we made the initial high, then we tried to break out again, and we tried to break out again. Now we're trying to break out again, and we're going to drop. We shall see. If we can break out and back test it, that's a bullish sign. If we break down, though, here, probably going on down. Now, you may be like, what the fudge is ES? I've never even heard of this. This is the S&P 500 futures. It's the futures for SPX. I look at this because it has overnight action, and it trades basically 23 hours a day, 6 days a week. Basically closed Saturday. That's it. And you see we closed right up there at, we closed at 5 o'clock, basically. Reopened at 6 o'clock and dropped back down. Now we're retesting a breakout. Now look at that, because you jump over here and look at SPX, and we stopped trading at 4 o'clock yesterday. We didn't even keep trading until 5 o'clock like ES. And then we reopened this morning, and there's no overnight action. It does present a little bit different charts, but the downtrend of highs is intact. Now, right here was the potential breakout. So we don't even have this potential like push through like we do on the futures right there. It just came up and potentially coming back down. We go look at the daily chart right here. We haven't hit the roadmap line. We've got a ways to go if we're going to hit that support down there. Now, NASDAQ is a little bit different story. We've already been down here. We've already touched that support. Rallying back up a little bit. Positive? Maybe. But you go look at NQ, which is the NASDAQ futures. This was the high. This is the highest high, all the way back here in October, before Halloween. We haven't had another high since then. Everybody talks about, the market's at all-time highs. I guess we're in the vicinity, but this is looking like a correction, and the correction can take another step down and be lower low than back here at Thanksgiving. From Halloween to Thanksgiving, we took a spill, and then we've just been chopping in between, grinding sideways. So if it felt like the market's frustrating you for the last few months, there's a good reason for it. Hadn't really been doing jack diddly. And ES did make a highest high more recently in January, but kind of bleeding off a little bit and has the potential to take a spill. Now, I mentioned we may hover for a couple days here and then start this bigger correction in March, and that kind of lines up with seasonality. We look at the seasonality here. Usually we get a big VIX spike, volatility spike in mid-March. So it wouldn't surprise me if we got some sort of bigger pullback volatility event. You know, this is a 20-year average right here. 20-year average, we see 30% volatility. Now, interestingly enough, on the VIX yesterday, we actually dropped below the 20-day moving average. And for the first time in 30 days, we spent 30 days above the 20-day moving average, and we were bleeding it off yesterday. Long term, 20 has been the resting point. And back here, going into the new year, we were all the way down at like 13 area. We've been ramping volatility a little bit, but yesterday we bled it off. Look how organized that looks. It's kind of creepy. Look how that almost looks organized in a chart that usually is absolute chaos. You don't see, like, there's no other instance, at least in my memorable past, of VIX being so controlled. I mean, look at that. Look at how organized. I mean, that's the first time I've really paid attention to that. But look at that. Look how, golly, that's weird. So for a long time, people have said this is a kind of a broken index, and it only represents S&P. So if you use this to try to say that options on NASDAQ are priced whatever, that's not entirely accurate. And it started out as like the ratio of puts to calls and a little bit other math sprinkled in to try to figure out the volatility index. So it really has to do with the put call ratio on front month S&P 500 futures when you really dive into what this is. So be careful trying to extract too much meaning in the short term out of VIX. Just throwing it out there. There's a lot of myths around it. Maybe I should do a whole talk about what it is at some points. So NASDAQ, this is coming up to that 618 resistance. Did it in a ABC fashion. That can lead to another leg down. Right down in here, around 23,000. Russell. This one's an interesting, this is small caps. And what we're kind of seeing here, we had this head and shoulders back in January. We broke down, we hit basically to the tick of where I would expect it to go. Bounced right back up. Couldn't break through that uptrend of lows. Retraced, started its own uptrend of lows over here. Maybe made another head and shoulders. And if we break down, we could easily come right down here. Easily. So this little light of mine. It's kind of crooked and skewed up, but kind of got it in there a little bit. Oop, that over. Now, is this one going to be a rejection, or is it going to go the other way? This one was much more clean, like the bottom of those candles all kind of hit the right levels. This one poked through. It might reject. Now, rejections on head and shoulders, typically the size of the head would be off the neckline the other way. So it looks something like this. Size of the head, off the neckline. So we could be popping out to 2780. If we get up to that point, probably going on up to that fib line right around 3100. But if it does play out to the downside, that right there, going down, it's going to put us somewhere down in this vicinity, right around that 2480 area where the roadmap line is and where the prior breakout high was from all the way back over here in December 24. Made this high. And we rejected hard off of that. So we'll probably come back and retest that breakout. And it took a lot of effort to get through that. that high from 24. And look at all that effort. And then pulled back, bounced off the roadmap line, and shot up right to the target, 1272. And now we're chugging along here. So the two potential paths we usually see, one, go sideways for a while and then pop the 1618. Two, retrace to the breakout and then pop the 618. And the third path we didn't do, which was just rip on right on through. But we didn't rip right on through. So we're doing some sort of consolidation. We'll either dip down here or we'll keep consolidating till we get enough energy to pop. That's kind of the potentials right there for Russell. And ways to play it, you know, you could play UWM, which is a leverage on IWM, if you wanted to play that. Now, oil pretty firmly rejected the breakout here. Watch for the support test. We're probably not going to be doing any actions against Iran until the next moon cycle. It's just typical the way it works. So you could almost set the calendar for the next new moon, and that might be out here where we do the thing with Iran. So we didn't quite, a lot of people thought we were going to do it right now. We didn't quite have all our assets in place, so wait a month. Wait 28 days. Next moon cycle. GC. Coming up in here. Could still spike that, finish up this pattern, and then rip everybody one more time. That's what it looks like to me. Bitcoin. As I mentioned, we might reject the breakdown. Now we need some continuation right up in here. 785 would be the kind of typical target for this. Right in there. Doesn't have to. Could come up shy, come up short. But that'd be kind of what I expect. Now, if we actually go off the low up down here, it could be down at 75. You know, figuring out exactly where these fibs need to sit is difficult. They're all fuzzy zones anyway, so somewhere in this neighborhood, that 78 would be kind of an ideal spot. Come ripping back up through. And then we'll probably do a three-wave. You know, this was kind of a B, C up. We'll probably do an A, B, C down. And then we'll do a 1, 2, 3, 4, 5 on up. Around that 90 to 100,000. And this whole, the rest of this whole crap could take well into May, possibly June, to get up in here. But then I caution with a big red light, that sets us up for a swift drop into that October 3rd, 4th, 5th, early October timeframe. Out here. Down in the $30,000 to $50,000 area. That's what I am. That's what I have drawn out here. So we may see this pop on up over the next couple of weeks. Three-wave retrace back down in here. Get a move up in here. And then take a bigger spill down in October. That's the path I expect for Bitcoin to take. Until it proves otherwise, this is what I expect to happen. Be careful out there. Ethereum. Yeah, be careful on that one. We could pop up to 22 to 23, maybe even 2,500. Then probably embark on a three-wave retrace. This went a little deeper. I'm not so sure on the upside there. Dollar. So right now, this is a first move, a second move. 1, 2. We could do a 3, 4, 5. Get up in this vicinity. And then take it back down again. Dollar climbing puts downward pressure on traditional commodities. Dollar dropping puts upward pressure on traditional commodities. So, and it's not like necessarily day to day. Like the green candle generally puts down pressure on gold and oil. A red candle generally puts up pressure on gold and oil. Simple as that. It doesn't seem to flow over into Bitcoin as much. NKD, global liquidity, it tagged that next upper target. This is a big cautionary flag for me. We may have just a little bit more upside to go, maybe possibly up to 62, but this is, the countdown is on for me. It doesn't have to, but I strongly think we're going to see a large pullback after doing this monster climb here. Probably going to see a large pullback, probably going to take down the US markets with it when we do this, because that's just typically what happens. We get a big flush out, global liquidity, happened over here, happened over here. You may be like, well, Liberation Day was separate. Yeah, maybe the Liberation Day pulled down this. It's all so intertwined. This is just kind of a, this indicator kicked off back here. We were having trouble. And then when we broke down out of that box, that was my big warning sign right at the end of February that we were about to take a bigger spill. That's exactly what happened. And that's how I knew Liberation Day was coming. So watching this for a breakdown through support, maybe back down below 56,000. That's probably an indication that a bigger suck down of equity is going to happen in the markets. Apple has the potential to pop. Target is right up here, 295. Amazon, bottom potentially in, but we've got to prove it. We got to get back up through the daily roadmap line. Got to start making new highs, higher highs, not lower highs. Google, it would not surprise me to come back down to this level right there. Maybe even retest this. And if we get below that, we could retest the breakout all the way down here around 200. Meta, holding up, higher lows so far. It's a breakout above this, and then this, and then this. Those resistance levels, breakout through those sets us up for 1100 to possibly 1300 for Meta. That's probably going to take a while. I own METU to take advantage of that. Microsoft, this is starting to look good, but 3 candles and new trend does not make. We need this to come up. We need this to pull back and back test a level, move up again, make higher highs, break through the roadmap line, back test. That would be ideal. And then keep going. So the beginnings of a potential retrace, but you can see we've done stuff like this right here, done one right here, we did one right here, did one right there, did one right there. So what's the difference between this potential here and these back here? Nothing so far. This can still rally right up in here and then take another leg down. So that's why I'm not convinced 3 candles does not make a new trend yet on Microsoft, despite it sitting on. This did exactly what I said. So we're coming back down to retest the roadmap line. We tagged the target. Boom. And I mean, that was the arrow, right? And it's taking the rest of the market down with it so far. So probably going to come all the way back down to the roadmap line. Probably. It's not a guarantee. This could hold support in here and go higher. It's possible. And we could hold, we're already below the breakout right here. Popped up, hit that 1.1448 and pulling back exactly like I kind of outlined. And I would expect it to come down to the roadmap line. That's why I played a little short position. It wasn't very big. Let's see if I can find it. So I didn't really post this anywhere because I played it late in the day and I just, It's one of those things. Right here it is. I bought a debit spread right there. Did it 3:30 yesterday afternoon. Set up for a 50% profit target. There's a debit spread. I just bought a 197.50 put, sold a 195 put right below it, and when price dropped through it, booked 50% profit. Now I could have kept it going. I mean, obviously this is down at 189, so almost $10 in the money. But 50% profit overnight, that's it was a reasonable play. For expecting it to pop up here and drop back out. I only had till tomorrow on the options, so there we go. Hey man, Hawaiian style pizza. It's just umami. Circling back to the chat now. I lost the chat there for a few minutes. So. Anyway. Netflix. Starting to look like we're cruising on up to 100. There was a large call option play yesterday on Netflix. And FLX. Let me pull this up and see if I can find it. Yeah, it was right. Have to grab the. Yeah, it was right here. I actually bought one just to see. That's volume. Let's check out the open interest now. Oh yeah, 58,000. That was all yesterday. Or 57,000 of it was yesterday. Somebody bought one big block. One big sweep order. I was like, might as well give that a shot. Maybe somebody knows something. It's out for 78 days at this point. And how did I find that? It was on Bullflow, actually. You pop on the main page here. Showed up right in here as a crazy option played on, it was a volume spike in options. And I went for it. I was like, it seems reasonable. Right now we've got negative flow. Not much to look at here. I found that the ones that are like 20, 30,000% on things that are bigger name tickers are kind of ones to watch. Calls were just being played out the wazoo. They were being played 5 and 6 to 1. Like for every call that was being bought on Nvidia yesterday, for every 6 calls, there was only like 1 put being played on Nvidia. To me, that said, probably going to drop. Probably going to rip the call players. Just makes too much sense. So there's something to that bull flow data. I wouldn't talk about it if I didn't like it. And if you want a piece of it, links in the description. I get a little cheese off if you use my link. This might be coming into the top. I go pull the gainers. Things moving up $2 or more in the pre-market. Things moving down $2 or more in the pre-market. Put them on the list. EWY on the list for like the second day in a row. KORU. Be careful here. This is a 3x leverage if EWY takes a step back. 10% is 30% here. 30% here gets to be a big number when we're at 600. We're talking about 200 points step back. And if things got a little spicier, maybe as a 30% pullback on EWY, we could be talking about like 90%. Could drop from 600 to 60. Yikes. So that's why I say be careful on this one. If you got the profit, might be time to consider doing something else for a little bit. Something else. SanDisk getting a little crazy. Probably needs a rest at some point. Melly. Relief rally, but is that the bottom? I don't know. Not confident there. I'm not confident at all that would be the bottom. In fact, it looks like it could go much deeper because this looks like that was the first move down right there. 3-wave retrace up to the 618. And this could come on down to like 1300. Sizzle. Sizzle, sizzle, sizzle. Looks like a 5 down. Probably working on a 3-wave retrace. So we've got that high right there. We got this low right here. Probably working on a retrace up into A, B, C. Oh man, this looks too good. Too perfect. If we popped right there, this would be an absolutely beautiful correction right down in there. Wow. Yeah, so that could be the path for Cecil right there. Be careful on FinTech. Light just keeps rocking and rolling. That's one I talked about back in, gosh, I don't even remember. It's like July. I said this, when it broke out, it should outperform S&P 500 for 6 to 12 months. So this could keep going into July. Be careful. Eventually, that train's going to run out right there. Q. My gosh, man. Watch for that to come back. VAC. That's a downtrend all day long. Probably wouldn't touch it. Spotify. Maybe has a bottom in place. Got to watch for resistance as we come back up. This is not a pattern that gives me high confidence yet. We're popping. Still making lower highs. Celsius. Look at that pop. What a nice pop. Even on an earnings miss. That's rock and roll, baby. That's target's up here at 225. I don't really have any of it because the beta is so freaking low right now. Got my money deployed to other things, but maybe that was a bad decision. I don't know. Smucker's still a downtrend. Coherent being crazy. Shake Shack. Yeah, it's a downtrend. Be careful. GCT. That might be a breakout. Could go climbing. Don't really have much to predict off of this at this moment. Just has a little baby roadmap bounce. There's the high, there's the low, possibly 46, 48. KMT, watch for the retrace. About 215 to be the next upside. EWI, we're at resistance here. Be careful. Could climb on up to 237 if it's going to keep being crazy. I mean, you got Samsung and SK Hynix. If we keep being crazy in the AI stuff, this will keep being crazy. NTNX, no bottom in sight. TER, just keeps ripping, no pullbacks. AVAV, looking for this to potentially make one more little splash down, come back up, break through the 618, and get the upside. Potential right up in here, 450, 480, possibly even up to 600. Snow, looking for this to hold. So this is at, I talk about the downtrend of highs. We broke above, back testing. If we hold it, potentially propels us up to all-time high numbers for snow. IBM. That could be the bottom. It's a good place to call the bottom. Don't really have a structural reason for that to be the bottom yet. Just gonna back tested these prior lows here. And the breakout back here. Proportion wise, I don't know. VST. And it's starting to try to get through. We can actually make a higher high here. That would set up a bigger upside on VST. HubSpot. No telling if that's the bottom yet. No telling, indeed. Could be. It's possible. Resistance up here at 500. 1,000 be the next upside if we can get it going. Flutter Entertainment. Wow, look at that. Got punched in the face. That looks like to me that we're going for a lower low. This looks like a absolutely beautiful correction continuation. Probably coming down below that 80 area. Could be a good short. You're into that sort of thing. AEHR. Resistance at the prior high, 50. PSTG, pure storage. Doesn't look like we're done yet. This is starting to look like 5 down. Resistance at this 84 area, and that can lead to a secondary move down. First move down, second move down. Watch for the roadmap line. No sign of that being done yet. BSY. No sign of that being done yet. Decliners, ONC. Back to the roadmap line. Secondary bounce. Still has the upside target. 396. SMPS. Choppy. No direction. FTAI. Target 315. Watch for the pullback. MCB. Watch for that to come back to the roadmap line. KYMR. Basically tagged that target I had on there. Watch out for that to take a spill. Nope. Nope. Be careful on a bunch of those. Baidu. It'd be good to see that hold there and take a bounce. The bounce I would be looking for. Come back up through 150. Get 170, 180 on the upside. Zoom, zoom. Take it up. Punch in the face. Didn't make it to the target. Couldn't get through the red zone. Gap down. If we can ever get through it, we have an upside resistance probably at this prior high. At this point, that's a 3 move up. We didn't even tag the proportions. So if we break down below the uptrend of lows here, this is probably coming all the way down to a lower low down at 50. 4 broke down below. Yeah, that's probably heading down here. Shift 4 payments. Baba. These guys released a new AI model yesterday that actually competes with Claude Sonnet thing that's like the top of the line, but uses a ridiculously lower amount of processing power. Like, as in it can run on my Mac Studio. Craziest freaking thing. SCCO. Watch for that to retrace. Gil. Watch for that to retrace. TTD. Maybe we're done on the downside. EOS. Albemarle. Looking for this to break out and go higher. I was talking about that one. LAC. Let's hit a few of the others. Potential at support there. Be good to see. URA. That one looks like it's about to break higher. I have 65 calls sold against my position for March on URA. The ALB, what was that? PLAC, CCJ. And this one could retrace. So be careful chasing that stuff too much. SII. Sprott. I guess these are the guys that make all the cool funds. that actually pass. This thing just printing money right now. So if all these precious metals funds pull back, this could pull back, but this looks like they're just printing money on the fees. Rock and roll. Yen. And like I said, that probably needs a bigger downdraft here. Maybe a little bit lower down in the 30s before we find the bottom. ARRY. It's choppy overlapping. We could come all the way back down in the 5 area. BNAI. I could come back to the roadmap line pretty quickly. That dumpster fire. Anyway, CRM at the potential support, but we've got to do something bullish. Potential upside up to around 600, but AMD, as briefed, probably needs one more dip. 1, 2, 3. Probably needs one more dip in here. If we do that, set up the upside potential. AMUU is probably how I'm going to play. TFX, find a resistance. PALL, if we could hit the roadmap line, that would make me feel really warm and fuzzy here. First move down, retrace. Next move down. It may happen when we get the gold, silver, platinum next leg down, which is probably coming. Probably coming. AI. Well, as I mentioned for a long time, we're probably going lower low after that lower high thing. So there it is. How low can she go? 0. 0 is how low she could go. Rio Tinto. And watch out for that one to potentially top out and then take a big retrace. All right, things that were set up for potential entries today. Dun, da, 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 da. There's the high, there's the low. Entry 145 targets. And yeah, no history on that working. CLPT, don't like that. That's a little baby, just a blip. 17 would be the target, but no statistical significance here. DKS, another choppy sideways hot mess. And it's probably set up to drop. Like first move down, retrace, next move down. But we're holding a higher low, so don't discount it. Although this algorithm did pick up an entry from back here, from this high, this low. That entry hasn't been able to do anything to the upside. My scanner kind of picked up this secondary entry right here. Looking at 225.58 target. EW, probably the best looking one out of the crew so far. Entry there, 89.50 targets. 28, 89, 2.8. Looks reasonable. UMA. Actually, a customer of UMA. Here's the high, here's the low. Entry, 12.50 target. No statistical significance. Prime. There's the high, here's the low. Entry, $5. Low price stuff, be careful. Low price stuff, think about it. Stop is always a dollar below the low. So dollar below the low is like 30% stop. Yeah, I probably wouldn't take that. PROK, same thing, except the stop is going to be like 70 cents, which is a 60% stop. Yeah, just doesn't make any sense to take that one. RDN. Got a fair history, not 30 trades in the history, but fair history, 68. Just runs a little light. Doesn't mean it won't work. Statistically, 75% of the time this works all across tens of thousands of tickers. If they don't have 30 trades, it doesn't really, this one could win the next 5 and push this up above 75, and this could turn positive. Right now it's negative, so that would be the target right up in there. And SXT. Well, the last little permutation worked. Here's the high, here's the low potential, and 107.80. Doesn't even have to get a new high or anything, just kind of more volatility in the same range. Food specialty. I have no idea what they even... Candy? brands they make. Do not share my personal information. Colors, flavors, extracts, careers. So I guess they supply the flavors and extracts and natural ingredients. I like that, natural ingredients. It's probably a bunch of weird crap you never heard of before. Anyway, down the rabbit hole. They make a lot of money. Looks like pay a nice dividend. Companies you companies you never heard of for 500, Alex. BYGR. The thing about it is, one of my followers probably worked for them and will tell me about it later. Another low price thing, and I just skip it. So circling back around, looking at the expectation for the day, looks like we're following the prophecy of Nvidia dropping and pulling the market down with it. Holding under the downtrend highs, couldn't break through. SPY, set the range and see what we got cooking. Good looking. Oh, there, it loaded. Weird. So it wouldn't load earlier, but now it loaded. Imagine that. Nix that off, nix that off. Let's see what we can come up with. So the gamma bubble appears to be red in nature today. See the brighter red color here. Maybe I should pull it over so it's not right behind my back here. And that sets us up with the potential to come all the way down to 679. That big level sit up here, can't ignore it. So 691 and 679. 691. And we started above that. And I say 71. Yeah, no, 79. 79. Right there. That's a big range. And then jumping in and looking at the levels. Kind of balancing this out. A lot of put players for the next couple of days. I don't know. We balance the calls out probably down here around 687. Balance that big chunk of calls with the puts. So we go 687 with the level today, which is just right where we are, right where the roadmap line is, funny enough. But that may not hold. We may push well on down to the lower end of this range. Save that. Jump on the cues. Q. I've not had good luck doing this on individual stocks because there's just not enough directional option players to make a difference. And look at this, the bubble kind of non-existent here today so far. Got a few big levels, not really anything notable. I keep looking at the other screen because this screen that I'm looking at, that red and that red look the exact same to me on here. But on this screen, they're drastically different. So probably need to color adjust a little bit. I'm going to go 611 up there and then 590. Ooh. $100 million level right there. Go 599 for today. 611 and 599. That's the range I kind of expect to stay in. far as levels go, where do we balance it? A lot more balanced here. And wow, look at that. There's you got two big options expirations here going. This one and then a month away. And there's not really, this is what I was saying, like there's not been very many options played on queues. It's just become uninteresting, I guess, for big money right now. So you're just not seeing the premium and everything put in there. So this kind of balanced a little bit. We may hang out like a 606, possibly. Right where we are right now. We've not seen this pinning very well this week, so take it with a grain of salt. We could very well end up down here messing around where that big level is on the gamma chart on the heat map. You see this big level down here at 600. We may go hang out with that for tomorrow. All right, be careful out there, everybody. I just gave you what I thought. I don't think SPY's coming back today. That's the range. Based on the options, that's kind of a balance point, but we can easily come down here. I don't think we're going back to the highs today. Probably coming down to test the lower end of the range. There's a big level sitting out there. Now, the reason I say all that's SPY 6. Come on now. These big levels, 500 million, 700, almost 800 million, billion right here. We're probably going to hang out with these levels. Wouldn't even surprise me to touch that 680 today. And then there's still big levels down too. 200 million, 200 million. So that's 700, almost $800 million level right there. We could go visit that pretty darn easy. We were already up here, so we've already visited that level. May come down here. Price-wise, ES rejected. Get through the 15-minute. Not good. No bueno. Coming up on 30-minute supports. If we get through that, 1 hour support down here around 6,900. 4 hour support equally right down at 6,900. So more significant support down at 6,900. You can see where it's kind of where we've hit our head on the way up a bunch of times. Maybe some support there to reverse. But if we get through that, probably going lower low than we were back here early February. Not necessarily today. We could fart around in here today and tomorrow, and then March take the spill. So be careful out there. It's your money. Nobody's watching out for it more than you. I'll be on Market Masters 11:30, and that's the show.